Dear investors, in light of the current market volatility in traditional asset classes, we want to issue a brief interim update on our strategy, which continue to perform very strongly. Our strategies have no correlation to traditional asset classes and remain very resilient to economic conditions. Our portfolios are very robust with very low volatilities. In recent weeks, very important, this has remained the case, and our strategies continue to perform as expected, increasing in value. So far, our portfolio has been completely immune from direct hits from recent market events. Nevertheless, we have been in very close contact with our biggest borrowers, local managers and originators, and they all confirmed that there has been no negative impact on the business. Please remember that we focus on loans that are all backed by strong collaterals and oftentimes personal guarantees by the business owners. In some cases, we even have insurances against default. Therefore, our investments really represent the lowest risk in the borrower's capital structure. We have received some questions around our exposure to trade finance, especially in Asia, to which we have investments of around 3% in our Global Lending Opportunities Fund. So far, there has been no loss, and we do not expect losses in the near future. Remember that even during the great financial crisis in 2008, default rates in trade finance remained extremely low with very high recovery rates. Please also remember that we focus on low duration strategies. Our liquidity does not depend on conditions of the secondary market that could eventually dry up in times of stress. And this is a very important difference to other funds that operate in alternatives and private lending strategies. In our case, the liquidity comes from natural maturities that we have in the portfolio. So we have an average duration of 45 days in factoring, for example. We have 2 to 3 months in trade finance, and we have a duration of 6 to 9 months in bridge lending. This means that if it's necessary, we can raise a lot of cash very quickly, which really makes our investment strategy even more conservative in difficult times. We also strongly believe that the recent turbulences in equity markets and the very, very low returns that we have right now in fixed income markets will create an even stronger demand for alternative products and especially for low risk private lending funds. In some areas, we believe also that future returns might be even more attractive for our fund because traditional banks continue to retreat from lending to small and mid-sized enterprises in difficult economic times. So we really view the current crisis much more as an opportunity for us than a threat. Thanks for your attention.